All right. Aurobindo Pharma, second quarter, fiscal year 2025. Let's do this. We've got investor questions. We've got the press release, the whole 9 yards financials. We even got a snazzy investor presentation to dig through.
Oh,
So,
good stuff.
yeah, all of the good stuff. So what we want to do today is give you the need-to-know information, the things that'll make you go, huh, that's interesting, and not get bogged down by all the crazy financial jargon and stuff like that.
Exactly. We'll keep it clear, concise, and insightful. Help you understand where Aurobindo stands and maybe where they might be headed.
Perfect. So the press release, right off the bat, hits us with the big numbers. Revenue for the quarter, over 77 billion rupees. That's a 15% jump compared to the same time last year. Pretty impressive, right?
Yeah, that's pretty significant, especially in the current pharma landscape. Suggests they're doing something right, navigating the market well, finding those opportunities.
Yeah, for sure. And of course, the big question is, can they keep that momentum going?
Yeah.
Is this growth sustainable?
That's the million-dollar question. And to figure that out, we gotta dig a little deeper.
Okay, so let's dig. One thing that jumped out at me was the U.S. market. Obviously, it's their biggest revenue source, but it actually dipped a bit this quarter. Compared to the last one, I mean, what's the deal with that?
Well, if you look closely at the investor presentation, it clarifies that U.S. revenue, excluding Puerto Rico, actually went up.
Okay, so there's a little asterisk there. What's the story?
Seems like they might be strategically shifting away from their Puerto Rican operations.
Interesting. Why would they do that?
That's the question, isn't it? Lots of possibilities. Maybe increased competition down there, or some regulatory hurdles specific to Puerto Rico. Or maybe they're just focusing on more profitable areas within the U.S.
Makes sense. So that little detail about Puerto Rico could be a sign of a bigger shift in their U.S. strategy.
Absolutely, something to watch for sure, as we analyze their future performance.
For sure. Now let's switch gears a bit. The investor presentation was really pumping up their biosimilars business, talking about a market worth over 50 billion U.S. dollars.
Yeah, they're definitely excited about that.
That's huge.
It is huge. But we got to remember, biosimilars, it's a long game. They're essentially generic versions of those complex biologic drugs. Huge potential, but they take a long time to develop and get approved.
Right, right. So it's not like they're going to be raking in that 50 billion tomorrow.
Exactly. But the good news is Aurobindo has a lot in the pipeline. Some of them are pretty close to launching, which is a good sign.
Yeah, they specifically mentioned trastuzumab, the biosimilar for breast cancer treatment, which just got approved in India, right?
That's right. Big milestone for them. Opens up a huge market in India, and it shows they can actually deliver on these biosimilars.
Right, so it's not just talk. Now the question is, how quickly can they scale up production? And can they navigate the regulatory hurdles to get these things approved in other markets?
Exactly. Lots of pieces to that puzzle.
Now, speaking of scaling up, let's talk about debt. The investor presentation showed a pretty big jump in their debt over the past year. Is that a red flag?
Well, not necessarily. If you go to Note 6 in the standalone financials, you'll see that a big chunk of that debt increase comes from their stock buyback program.
Okay, remind me, what's the whole deal with stock buybacks again?
So when a company buys back its own shares, it basically reduces the number of shares out there, which can boost the value of the remaining shares. It's a way to return value to shareholders.
Right, right. And usually it signals that the company is confident in its future.
Exactly. It's a strategic move, not necessarily a sign that they're in trouble.
Okay, that makes sense. So they're taking on debt to buy back stock, but they're also investing heavily in these new facilities, especially for biosimilars and CMO, right?
Right, they're playing the long game, trying to build for the future.
It's like a high-stakes chess match, huh?
I like that analogy.
Okay, so speaking of potential risks, I noticed something in the consolidated profit and loss statement. A loss on business restructuring. What exactly does that mean? What kind of restructuring are we talking about?
Well, restructuring can mean a lot of things. Often it's about streamlining operations, making things more efficient and profitable.
Right.
Sometimes that means job losses or changes in their overall strategy.
Okay, so that's definitely something to keep an eye on. See what they actually do.
Absolutely. Financial statements only tell part of the story. Got to watch for future announcements and news to see what this restructuring really means.
Okay, so big picture. We've got impressive revenue growth, some strategic shifts in the U.S., a big bet on biosimilars, and a bit of a debt puzzle to solve. What do you think we should explore further?
Well, we've only scratched the surface of those U.S. market dynamics. Maybe we should dive deeper into their performance in other regions, Europe, and what they call growth markets.
Yeah, okay. Let's do that.
So we've talked about the U.S., right? How Aurobindo's kind of shifting things around there, especially with that whole Puerto Rico thing.
Right, right.
But they're not just focused on the U.S., obviously.
Yeah.
Take Europe, for example.
Yeah, that 19% revenue increase year over year, that's pretty impressive, especially in a market like Europe, which is already pretty mature.
Exactly. So what's driving that?
Yeah, what's going on over there?
Well, the investor presentation, they're highlighting strong performance across all their key European markets. So it's not just one country, it's a pretty broad success story.
That suggests a pretty solid strategy, right?
Seems like it. Makes you wonder if they're actually gaining market share, outperforming the competition?
That would be a big deal, especially in a tough market like Europe.
Definitely. Now, how about those growth markets they keep mentioning?
Yeah, what are those exactly?
It's basically a catch-all term for everything outside the US and Europe. Includes their domestic sales in India, too.
Okay, so a pretty diverse mix of regions.
Yeah, and get this, they saw a 44% year-over-year increase in this segment.
44%. Whoa. That's crazy growth.
Yeah, they're killing it in those growth markets. And if you look at their consolidated performance breakdown, domestic formulations in India, just that alone contributed like 71 crore rupees in Q2 FY25.
Okay, so their home turf is still a major growth driver.
No doubt about it. But growth markets, it implies more than just India, right?
Yeah, are they actually expanding into new territories, or is it all concentrated in a few places?
That's a good question. And unfortunately, the investor presentation doesn't really break it down any further.
A little more transparency there would be nice.
Definitely. Would be interesting to see exactly which growth markets are driving that performance.
All right, so we've got the U.S. kind of in a state of flux, Europe steadily climbing, and then those booming growth markets. What else is there?
Well, we can't forget about their API business, active pharmaceutical ingredients.
Right.
So these are the raw materials, the building blocks for all the drugs they make.
Okay, the foundation of their whole operation.
Exactly. And here's the interesting thing. Their API revenue actually went down a bit year over year.
Huh. That's surprising, given all the growth we've seen elsewhere.
I know, right?
A working dip.
It's hard to say for sure. Could be pricing pressures, changes in demand for certain APIs, maybe even some shifts in sourcing strategies within the industry.
Okay, so lots of potential factors.
Yeah, and it also makes you wonder if maybe they're strategically shifting away from just supplying ingredients.
Like focusing more on finished drug products instead.
Yeah, maybe. Especially with all those investments in biosimilars and CMO facilities, could be a sign that they're moving up the value chain, focusing on higher margin products.
Makes sense. Trying to maximize their profits.
Right. Now, there's one last segment we need to talk about. ARV, antiretrovirals.
Okay.
So these are the medications for HIV/AIDS.
Right, a crucial area, especially in India.
Absolutely. And this segment saw a pretty significant decline in revenue.
Oh, how much are we talking?
Over 22% year over year.
Wow, that's a big drop. Any ideas why?
Unfortunately, the investor presentation doesn't really give us any specifics.
Okay, so another area where a little more transparency would be helpful.
Yeah, it could be increased competition in the ARV market, maybe changes in government funding for HIV/AIDS programs. Who knows?
Yeah, lots of possibilities.
It's definitely an area that needs further investigation.
Okay, so we've looked at regional performance, strategic shifts, some areas of strength, and some potential concerns. Where do we go from here?
Well, we've talked about the big picture stuff, but there are still some interesting details hidden within those financial statements. Things like their debt profile, cash flow dynamics, and those exceptional items we mentioned earlier.
Okay, so the nitty-gritty details.
Exactly. Let's roll up our sleeves and dive in.
Okay, so we've explored Aurobindo's performance, across all these different markets and product segments. But now it's time to really get into the weeds and look at those financial statements themselves.
Right, the nitty-gritty details, where the real story often unfolds.
Exactly. So we talked about that debt increase, right, and how a lot of it came from that stock buyback program. But at the same time, they're also investing heavily in those new facilities. So how are they managing that balancing act?
Well, that's where the cash flow statement comes in, and it tells us a pretty interesting story.
Okay, lay it on me.
So in the first half of fiscal year 25, they generated over 65 billion rupees from their operating activities.
That's good, right? Means their core business is actually making money.
Exactly. They're turning sales into cash, which is crucial for any company, especially when it's making these big investments.
Right. But those investments, they're putting a strain on their cash flow, aren't they?
Yeah, you can see that in the cash flow statement. Their cash flow from investing activities is negative.
which means
They're spending more on those investments than they're getting back from things like asset sales.
makes sense though, right? I mean, they're building
Right.
all those new facilities, especially for biosimilars and CMO,
Right. And to bridge that gap, they're turning to external financing.
taking on more debt
Essentially, yeah. Their cash flow from financing activities is positive.
because they're borrowing money,
Exactly. So they're raising funds to fuel that expansion.
but it's adding to their debt, of course.
It is. And that raises the question of whether this strategy is sustainable in the long run.
Right. It's a calculated risk.
Absolutely. Can they generate enough returns on these investments to pay off that debt?
And ultimately achieve that profitable growth they're aiming for.
Right. It all comes back to that chess game analogy. Every move has consequences.
Yep. High risk, high reward.
Now, before we wrap things up, there's one last thing I wanted to touch on. Remember those exceptional items we talked about?
In the profit and loss statement.
Yeah.
Specifically, that loss on business restructuring.
Yeah.
What kind of restructuring are we talking about here?
Well, restructuring can involve a lot of different things. Streamlining operations, optimizing resources, maybe even selling off parts of the business that aren't performing well.
So basically trying to become more efficient and profitable.
Right. Sometimes that means job cuts too, which can be tough.
Yeah, it's not always pretty, but it can be necessary for the long-term health of the company.
Exactly. It's about adapting to a changing market and positioning themselves for future success.
Okay, so big picture here. We've got impressive revenue growth, strategic shifts in key markets, a big bet on biosimilars, a somewhat complex debt situation, and some uncertainty around these restructuring plans. What's the takeaway for our listeners?
Well, I think it's fair to say that Aurobindo is at a crossroads. They're making these bold moves to seize these new opportunities, especially in biosimilars and CMO.
But those moves come with risks.
They do. That increasing debt burden and the whole restructuring thing, those add layers of complexity.
It's a high-stakes game for sure.
It is. And the question is, will these bets pay off? Will they propel Aurobindo to even greater success?
Or will they stumble?
That's the big question. Only time will tell. But one thing's for certain, Aurobindo is a company in motion, constantly evolving. And that makes them a fascinating company to follow.
It's been a really insightful deep dive. We've gone beyond just the numbers. We've uncovered the story behind them. A story of ambition, strategy, and risk. We hope you found it valuable. And as always, we encourage you to keep exploring, digging deeper into this world. Form your own opinions. Make your own informed decisions. Until next time.